Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It's Sunday. Let's take a look at some setups for Setup Sunday. There's a lot of open questions coming down the pipe in the next 6 months, especially going into an election year, going into a halving year, going into a spot ETF, US institutional product, ideally through a leading financial, highly reputable business, being BlackRock. Coinbase is the custodian. Minimal fees on that product, most likely. Those are certainly benefits and the draw to a product like that versus a product elsewhere around the world. So we know for the most part that that stuff is coming. You know, the question is what happens if the ETF doesn't come, which I put that at like a less than 10% chance that we don't see that in the next 6 months, at least an announcement for that. So on the legacy side, there continues to be this mega doomer macro narrative that we have to go into a recession. Interest rates are bad. Housing's bad. Everything's bad. I get it. I'm not going to disagree. But if we are headed for that recession, when? Is it before or after the halving? Is it ideally, similar to COVID, right? We had that massive COVID candle right before halving. Wipe out all the leverage that's left, although admittedly there's probably not much after SPF, 3AC, and Luna pretty much wiped everything off the map. Genesis is gone. Who's here, Anyway, so if there's a recession, assuming that's bad for markets, which it always has been, nothing's recession proof, maybe gold. But when will bad news be bad news? We had terrible jobs numbers last week. We had terrible ISM numbers last week. Market is celebrating Fed cuts sooner rather than later. It's just quite the topsy-turvy environment here. Something else I don't have on here is that we aren't really exactly coupled to legacy. So even if bad news is bad news, or bad news is good news for legacy, is it good news for us? I don't know. Have yields peaked? I don't think so. I'll talk about TLT towards the end. Based on our debt issuance schedule longer term, I still think we have a problem. We had a refunding announcement that was beneficial to the long end because they announced that they wouldn't be issuing as much as expected on the long end. And if the Fed was assuming that the long end was doing their job for them, in that rates were going higher, and now the long end is coming back down, does that mean the Fed is more likely? It's like if this, then that, then this, then that, then this, it's just back and forth, back and forth. Will we see a pre-election stimulus? I'll get to non-US stuff, but China and Japan already talking about stimulus and or on its way, Eurozone talking about cutting and or increasing liquidity because of recessionary concerns there. Do we have some sort of global recession in 2024? We're seeing jobs in the US, the numbers on unemployment tick up ever so slightly. And will the Fed do anything in an election year? I think typically they say they don't, but typically they do. They have always, I think, for the past like 5 or 6 elections, done something in an election year because something happens in an election year that warrants them to act. So will we see more bank failures? We did see a bank failure Friday, not related to crypto, but it was related to trucking loans, a bank in Iowa. Will we see commercial real estate issues crop up? We also have, in the near term, government shutdown concerns again, and then we probably won't see stablecoin legislation until the next election. We may go through all of 2024 without stablecoin legislation in the United States. The Bitcoin side's a little more clear. Past 6 months, who cares, right? We have a recession, who cares? We have halving, great. We have a spot ETF, great. So if you are, like most people probably, in the over 6 month crowd, none of this stuff really matters. But if you're trying to min-max and time the market maybe within the next 6 months, I can envision, for example, price action that brings us to the 40s or 50s in BTC land and then drops us all the way back down to the 20s, something like that. Something absolutely wild like that. Get everybody all bulled up. We've got a spot ETF, we've got halving, and then drop the bottom off of everybody as we get some sort of global recession or something, right? We just have to dodge stuff like that in the nearish term, right? For alts, will they get more spot ETFs? Will we get GBTC conversions of other similar products, right? Will we see a SOL ETF or a ETH ETF? And will that even matter? Because is there an appetite for that stuff? I don't know. Maybe if the Bitcoin spot ETF does well, the institutional appetite for digital assets as a group will improve. I just think the use case to sell that stuff is much more difficult than Bitcoin. To me, the institutional message for Bitcoin is extremely clear, whereas anything else, it gets a little loose. And then will ETH remain the laggard price-wise? I don't think it will. Well, I have some charts on that. And then stables, USDC is still hemorrhaging slowly here. And USDT continues to grow. They do hold a considerable amount of US treasuries, so that sort of shields them in a way. But will they get regulated out of the United States eventually is the question that I have. And then the rest of the world is kind of, a complete mess, which helps the dollar USD on a relative basis. So just some things to think about as we, for the most part, are probably positioned fairly decently for whatever's coming. If you think of spot ETFs coming in the next 2 months, if you think an announcement's coming in the next month, you're probably pretty heavily allocated to Bitcoin. If you're not, then I think now's the time to consider that, because the window is closing on the announcement time frame just based on the amount of holidays for the rest of the year. We've got Thanksgiving, we've got Christmas. The government's closed for a lot of those days. So, if the announcement's going to come between now and the end of the year, it's got to come fairly soon. Looking at some high time frame stuff, again, just a sanity check. I look at it once a week. Are we still on the straight and narrow for where we should be relative to halving? This is the power law corridor. We're at the bottom where we should be. We are nowhere close to overbought. Arguably, we're more oversold still than anything relative to when halving has occurred. We are right where we'd expect us to be. So we look good from that perspective. Downside risk is minimal relative to potential upside risk based on this indicator. We're talking about 24K versus 270K. Moving average multiplier, same deal. 2-year moving average looks good. We're above that for the first time since breaking below in 2022. The multiplier is somewhere, we'll say 150. And again, right where we should be based on pre-halving expectations. No concerns there. Plenty of room for upside on that one. Forget who it was, but somebody told me about the Pi Cycle bottom. We were talking about MAs in the MA video. And Pi Cycle top has been a famously accurate, back-tested moving average pair. It's a moving average and a moving average multiplier. I have those tops labeled. So it's calling the top within 4 days of the cross. Now my question for the Pi Cycle top in the future is, how do you know when we're getting that second high, right? Yes, in 2013, for example, it was correct, but it doesn't necessarily mean we won't reconsolidate. The answer for that, I think, is always, if we make a new all-time high, that's good enough reason to re-enter a position, but didn't work out so well in 2021. Anyway, so it's a Pi Cycle top. The moving averages you see on this chart are the Pi Cycle bottom. And again, not perfect, but honestly pretty good. It's calling a bottom here in 2015, which on most exchanges that was the low. It's calling the bottom here in 2018. Again, mostly correct. And aside from what happened after FTX, calling the bottom somewhere here in 2022, does a pretty good job, right? So if that's the bottom, where does it tell you to get back in? Well, that's the other cross. And again, these from cross to cross through the halving look pretty good. It's a buffet. You don't have to love it, right? Just something else to consider and think about, but we are crossed in a favorable way currently and based on how we should look on backtesting, right? That's the 350-111, I believe, cross for those curious, but it's in TradingView. Relative to the 20-week moving average, historically, that's been super important. We're above the 20-week. Great. How far are we above the 20-week? Relative to where we have been historically, we're about 20% above the 20-week moving average. Historically, again, pre-halving, you can do all this like slicing and dicing of where are we on this date relative to this epoch, relative to this halving, right? We can do that and play that game. I think it's interesting, but doesn't mean we can't go higher or lower. So the point of this is, in previous pre-halving periods, we've gotten to somewhere around 46% above the 20-week moving average as far as like a topping out is concerned pre-halving. So just something else interesting to watch. For instance, if we go to 50K, right, that would satisfy where we have been historically pre-halving. This is dynamic. It's going to change every week, but just something else interesting to watch. On the Bollinger Bands, haven't talked about these in a minute. We do have weekly Bollinger Band expansion to the upside. Doesn't tell you anything you don't know in that we have bullish strength here. Again, the question is pre-halving, what are we going to see? Are we going to see walking the bands over multiple weeks? Or are we going to see sort of hugging the midline, hugging the 20-week moving average until after halving and then making a move? Really the only thing that doesn't have me maybe as bearish as I would otherwise be relative to a pre-halving move is the spot ETF announcement, right? It's really all about that approval, not so much the actual product. That won't launch for months after, but the announcement itself would likely see a very interesting day on the Bitcoin side of things. Daily cloud looks great. We're above the daily cloud. All systems go here. 30K would be your Kijun bounce. Again, not different from the 20-week moving average. Weekly cloud looks great. We are again, though, in no man's land a little bit here. Stop loss somewhere around, say, 27 based on the cloud. If we see prices below 27, then we're probably in trouble, but ultimately it's 25K. That's still a price we don't want to see if we're bullish. 25 to infinity is great if you're bullish. Anything below 25 and it gets interesting. That breaks all sorts of models. 42K still very much on the table. For instance, though, during this having or not having announcement, spot ETF announcement, we may see, a move to 42 and then we get a recession of some kind, and in 2024, we see a move to 26 or whatever, right? It could be extremely noisy in the cloud. Pitchfork also gives us plenty of room for mid 40s here, as well as a support somewhere around 32K. So levels that I'm seeing, again, point to better risk reward moving higher. We broke up and had a tight consolidation, still have a tight consolidation on the 4-hour. There's been a really nice diagonal support. Eventually we're going to run into a decision-making point and figure it out. But what we don't want to see is a move below this diag just because we've held that for over a week at this point. And then if you want to put in some stink asks, we talk about stink bids in a bearish period, as in crazy low bids that when you're waiting for a big move to happen like in 2018, where could price really go if price got angry? In this case, I'm thinking, where could price go if price really got out of control in the near term? I think somewhere around 57 would be the max, absolute max bonkers price. 42 based on the volume profile, which is what this is, doesn't actually make a lot of sense. Maybe 39 makes more sense. 47 makes more sense. But 42 doesn't really make sense based on the volume profile. So what we may see, again, if we get an announcement on an ETF, is a massive spike, maybe a wick on the day to 47 and a retrace back to 42 or something like that on the day. Like it could get that volatile, I think. I don't think we're going to see a massive price dump on a positive regulatory announcement. So just something to consider, something to chew on for the week. November 8th was a date that's been thrown out as a potential first announcement for anything. We'll see. I'll believe it when I see it. ETH continues to lag pretty much everything. It's slowly been curling up. It's almost got a daily cloud go signal, almost has this Kumo twist to finish off the long entry criteria. Now, to be fair, it's had a Kumo breakout for quite some time. It just hasn't done anything with it. Everyone's watching that 1990 level, that 2000 level, which is good, similar to Link. And the entire market knows where that resistance is at, okay? The moment we're above that level, we're going to hit stops. We're going to hit people who are triggering long entries on momentum, all sorts of fun stuff. So ETH could also get pretty wild just based on following Bitcoin and also being just a laggard. For alts to do well going forward, they need to see BTC not retrace, okay? Whatever this 4-hour is, this needs to hold in general for alts to do well over the next couple weeks. If BTC retraces to 30, alts will retrace as well. They're not going to just magically hold their current levels, okay? Like I said, it's above the cloud, great. So that's really it for ETH. And ETH BTC, some people think this is the level. This is the line in the sand that matters. I think we will see some crazy 036 or something. I think we'll see continuous lows here eventually, just based on flows and regulatory approvals and regulatory clarity. So I don't think it's quite over yet. For ETH BTC still looks quite bearish. The entirety of alts, this is total 3 minus stables and wrapped Bitcoin. The entirety of alts need to thank Bitcoin for not collapsing because otherwise this chart would look much, much different. We had been talking about Goblin Town for weeks, didn't quite get there, never quite made that lower low. We're still in the consolidation range, but it has been a very strong push higher above this diagonal resistance. So there are many charts that look similar to this in that they're pushing their diagonal resistance levels. Solana, not really one of them. It's pushed its levels quite some time ago, but let's say we're measuring this as an ascending triangle or something. I know a lot of people that don't like ascending triangle bottoms, but we've seen quite a few of those in crypto land. And for something that's moved like Solana and Link, even Bitcoin, Bitcoin has ranged for a week now. It could range for another 4 and be fine. But what you want to see in something like Solana as well is a tight range. Holding 36 is fine. Holding the range is fine because eventually that should lead to higher highs. Otherwise, I would expect a retest of the breakout somewhere around 26, 25, something like that. But from a cycle perspective, Solana looks fine. Not a lot of people are all on the high and mighty Solana train after one move higher, after not going to zero, being backed by FTX and SBF. In a parallel universe, Solana launched without the backing of FTX, and I don't think it's where it is today without that. But that's ancient history at this point. And on technicals, it looks great still. Am I a buyer up here? No, I'd much rather re-enter a position lower. But from a cycle perspective, looks okay. It could continue to bang on this weekly cloud till the end of the year, until Q1, Q2 next year, and then make a move. And then arguably that's a better trade. 25 to 140 is better than 40 to 140. Admittedly, 40 to 140 is fine, but 25 to 140 is better. Not that that's what I'm hoping for, but that's also an option, right? I just say that based on this edge-to-edge move on Solana, but it still looks fine overall. No complaints there. Same with Link. And the funny thing about alts is they're kind of just at the whim of liquidity of the time. If we have no liquidity and someone wants to push Link to 30 next week, they could. If we have tons of liquidity and sellers come in, we hold at 12, right? But the technicals still like 30 on Link. These aren't, end of cycle targets. These are just mean reversion targets. The same thing with Solana. If we do get a retrace, I like 950 for Link. But even if it returns to the range, that's not the end of the world, really. Ultimately, you don't want to see anything below 5. And that's when you're in trouble. If we start making new lower lows on everything, like, again, Bitcoin at like 20, 15, then we're in trouble. I don't think that's going to happen. Something else I want to mention is Cardano, not from a fundamental perspective. I think it's less than worthless. But from a technical perspective, it's got multiple Adam and Eve attempts here. It's got a bullish Kumo breakout on the 2-day. It's listed on enough exchanges that it has a decent shot at actually making a move here. So ultimately, you want to see this above 41 to be sure we're out of the chop zone. But from a cloud perspective, it looks decent. And then a weekly cloud perspective, 169 is the mean reversion target. AAVE looks kind of similar. It's above that high time frame cloud. It's above a diagonal that was important, and very similar to Maker as well. So I like AAVE from a multi-month perspective, set it and forget it type deal. I'm not one to massage these DeFi small caps. If it's going to make a run, I'm going to be there the whole time and ready for it. My charts are out of order, but that's ADA again. On the weekly, and just not knowing what it is, you'd say, well, it looks like we're about to get a a bullish TK cross. There's a huge, edge to edge here. Looks okay. So maybe this doesn't move until after Bitcoin's halving, but something worth putting on the radar. Some few quick charts on legacy. There's a lot of notes here. You can pause it and read kind of my thoughts on if DXY goes higher or lower. I assume this goes lower. I assume DXY retraces to 103 based on trend. Peter Brandt, famous technical analyst who's been around since gold was invented, called this a king's castle. I called it a head and shoulders variant. In any event, both of us are pointing down with our arrows, so I do like 103 from that perspective. But if we're wrong, or this goes higher, which ultimately I think we want, even though the market thinks it doesn't want that. We don't want to see a recession. So again, we're at a strange topsy-turvy time with everything. On Bitcoin side, we definitely don't want to see a strong USD. But based on how everyone around the world in the central bank side is leaning more and more dovish because those economies are weaker, that may help buoy the DXY, right? If, even though things don't look great here, things look way worse elsewhere, you know? That's what I think people have to keep in mind and into perspective. Here's TLT, and we kind of talked about an inverted head and shoulders potential for TLT last week. Really, it was all about that QRA funding announcement that really helped bring the long end back down, brings TLT prices up. In any event, just from a cloud perspective, not quite ready for the bull market just yet. You know, we want to get back above 93. This could easily fail here. For instance, anywhere from 87 to 89. And we may see next quarter a bearish TK cross with prices below cloud, the classic bearish continuation signal on TLT, something to watch. You know, that's how I think we get more regional bank failures, more everything failures, crazy debt, right? Things go wild when yields go higher. As far as the S&P, low time frames, we're setting ourselves up for a similar inverted head and shoulders. No promise that we reverse or anything, but we have had some crazy strong opens, gaps that potentially need filling here. So it wouldn't be out of the question to just make another shoulder and then maybe get prepped for that Santa rally, a classic Santa rally that everybody talks about. Again, on the S&P, similar to Qs, there's also this decent cup and handle perspective, right? Again, trying to think like, how in the heck would we actually see this? I don't know. Do we see stimulus? Do we see emergency cuts from the Fed? Does bread go to $10 a bag and inflation's out of control, right? Like, I don't know. Just something to think about, because I think that would be a wild ride if we break the local high and then an all-time high across the board on this stuff. Last week felt like more of a short squeeze than a trend reversal. So we'll see. Here it is on the Qs again. Very similar cup and handle. That last chart, NVDA, I'm still bearish on fundamentals here. I know that's maybe insane, but as someone who holds the NVDS ETF, I'd very much like this to not make a higher high and invalidate and stop me out. Anything above the daily cloud and shorts get nervous. Anything above the current right shoulder and shorts get stopped out, basically. So what we don't want to see is any higher high get made on NVIDIA. And, you know, you can say this head and shoulders was obvious and too many people were super short and blah, 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 whatever, right? I'm taking that trade 10 times out of 10 regardless. So we'll see what happens. It's not a large position anyway, so I'll be okay. That's all for this one. Let me know what you think really of this list. If you have any other suggestions, things that we should watch out for the next 6 months. Like, dislike, comment, share, subscribe, and happy trading.